Okay, everyone. Thank you again for joining us today. Good morning, good afternoon, depending on where you are in the country. Um, we are very excited today to have with us Oceanview Life to go through some features and sales ideas. But first, I am Greg Yotis. I am the Senior Sales Director here at Pinnacle for the Life and Annuity Department. So, welcome. If you do have any questions during our presentation, please use the chat function and we will answer any of those questions at the end of the presentation. Before we pass it over to Oceanview, do want to just highlight some things for those of you who are with Pinnacle. You're familiar with these, but for anyone out there who is not with Pinnacle, this is our pfsinsurance.com website. Please, if you need to reach our team here, you can go under the About section, contact sales team, and right then and there in our sales team function, if it would open. You have Mark Bolger, who's our team lead here at Life and Annuity LTC, his extension, his email address, and then down at the bottom, because my last name begins with a Y, my extension 7105 and my email address. So please reach out to us with any annuity or life questions that you have. Also, with the annuities and the life insurance under our quoting tab, we do have annuity rate watch for you to use, and also the insurance quoting system as well, right here with the term /GUL. And then finally, for anyone who wants to get contracted with Pinnacle, you can go to our contracting section here and just hit contract now. Our contracting is completely electronic, so no need for any kind of paper forms, but you just basically fill out what we call here our spot sign, and you can get into our system and get working with Pinnacle. And hopefully after today's call, you'll want to get appointed with Oceanview Life. So with that, I am going to make our presenter, Dan Galena, who is the AVP of National Accounts for Oceanview. I'm going to turn it over to him. He's going to go through, just to mention, Oceanview is one of my favorite annuity carriers. They're straightforward, simple to understand, with great performance. If you're looking for principal protection and asset accumulation at the same time, there's no other better place than that. And Dan's going to take us through some sales ideas, looking at the Oceanview products and the features that they have, and also get into the products a little bit. So with that, Dan, I will turn it over to you.
Fantastic, and good morning or good afternoon to everyone, just depending on where you're in the country. Thank you very much for your time today, and thank you for the opportunity to be on the call. For those of you on the phone that have done business with Oceanview, let me just say on behalf of everyone at Oceanview, thank you very much for your confidence in doing business with Oceanview. We continue to have steady growth in our sales between our MIGAs and our fixed index annuities, and that is appreciative for all the business you do with us. And as Greg said, we're going to take you through what I'll call the company deep dive, but really I'm going to focus on ways to position our fixed index annuity and not go through necessarily all the nuts and bolts of, I'm going to assume most of you know what an annuity is and their surrender charges, but really get into like how are top producers across the country using our product to position with their clients. And that's really how I built this presentation. So let's get into the presentation. Give it a second. So here's our disclosures. And as I said, why Oceanview's ArborView fixed index annuity? That's really the focus of the call today. And know that everything that Oceanview offers is really for accumulation. Whether it be our MIGAs, which I'm not going to discuss today, but we do have fantastic rates on our short-term MIGAs, our 2 and 3 year, or our fixed index annuity. In both cases, very simple stories, easy for clients to understand, and driven just for the sole purpose of giving clients a safe money alternative for accumulation. So the way I've been starting this presentation, and as I do my presentations across the country, I have found that starting off with the rate sheet has been the easiest way to walk through our product. And I'll start out with the bottom right-hand corner talking about compensation. I know many of you on the phone are saying, well, compensation is not the most important thing, but what is the product and what is the solution for my client? But I'll start at the bottom with commissions, kind of get that out of the way. So our 10-year fixed index annuity currently pays a 7.5% street comp, and we do pay that all the way through the max issue age, which is 84 years old and 364 days. So as long as the client has to turn 85, we'll issue that policy, and it is currently paying 7.5%. Moving up one box, this is where the majority of our business is, and the majority of the reasons that people look at Oceanview fixed index annuities is the 9% fixed bucket. Now, this fixed account equates to about 83% of all the applications we receive. We see 100% of the premium going into the fixed account. And I think you can see why. If I can offer my client just over a 9% guaranteed return for 1 year, that's a great way to start the process of the contract. Additionally, it's not really a bonus, right? It's a fixed account. So I don't have to be concerned about, what will happen to caps in the future. This is a enhanced fixed account priced within the product, which takes me up to the next box, which is our index strategies. Now, we have our S&P, Russell, and NASDAQ, all three indices well known in the industry, well known by clients. They're nothing bespoke or out of the norm here. And you see that our caps are at 9.5%. Yes, if you're thinking those caps are a little lower than some of our competitors, you'd be right. And we've done that for a reason. We have priced the 9.5% cap with the confidence that we could hold that cap rate through the whole surrender period for all 10 years. What we've really done is we've given ourselves about a 50 basis point movement based on what happens with interest rates. But we're pretty confident we can stay at 9.5% for all 10 years. So instead of starting out at 11% and starting to see that cap rate slowly work its way down, we're going to try to stay at 9.50 for all 10 years. I think that's a great positioning for you and something to offer to your clients, so you don't have to have those upsetting conversations as you move through the surrender period of lower and lower performance. Additionally, when you look at our indices, like I said, S&P, Russell, and NASDAQ, we're one of 4 companies that offers the Russell and one of 5 that offers the NASDAQ 100. But ours is in a true cap strategy, and we are the only carrier that I can find that has all 3 indices on one contract. Moving on to a couple other things. When you move up the rate sheet, you'll see that we have the S&P 500 daily risk control, 10% excess return, annual point-to-point with a participation rate. We are the only carrier to offer this strategy. It's actually a fantastic low volatility strategy. It has been out and performing for 15 years now. It is done very well over its 15-year term. Many times it has had double-digit performance, and on a pretty regular basis, that performance is in excess of 20%. So at a 90% par rate, this is a great opportunity to give your clients the opportunity, again, looking for more growth. This might be a strategy. To go one step further, this strategy is 10-year performance right now is at 773. So when you think about the performance of low volatility and what else has been in the marketplace, you might be saying, I want to shy away from low volatility. I wouldn't shy away from this one. In fact, this was the top performing low volatility strategy in 2024 with a return of 18.75, which would give your client at 90% par rate a 16.8% return. That's not something you normally can talk about when it comes to fixed index annuity performance, but you can when you look at this strategy. And again, that's 15 years of live data. That's not us back testing and picking years. That's the actual performance of that strategy. A couple other things I'll just point out. If you're looking for a short term, we've got a 3-year surrender period, and we also have a 5-year. Both the 3-year and the 5-year par rates at 60 and 65% are very popular, as well as even taking a look at the caps at 7.5% on a 3-year. We're starting to see a little traction with that as well. So let's move on. We've talked about rates. Let's talk about strategy and how to present this to our clients and different sales opportunities we have for concepts. Well, one of the things that we talked about is having the three indices, and us, Oceanview being the only carrier that offers all three. One of the things that when I talk to our sales desk and I talk to them about positioning our product, is I talk about when we run illustrations, let's talk about what we're going to do year two if we go 100% in that fixed bucket. And I think there's a couple things we can do. One, taking a look at the chart and knowing that the Russell and the NASDAQ over the last 10 years has beaten the S&P in performance, and probably will happen again this year, is putting together the illustration of 1/3, 1/3, 1/3. So come out of that fixed bucket after 1 year of 9% performance and go into what I'll call a mini asset allocation model of 1/3 S&P, 1/3 Russell, and 1/3 NASDAQ. This way your client takes advantage of all three strategies. Whichever one performs the best, they have participated in it. And typically we could say that all three are going to kind of move in motion the same way, but one is definitely going to outperform the other. They're involved in that. Now, if you're talking about illustrations and you're like, but Dan, I just want to show like what is the best performance I can show in an illustration. If you go forward and run 50% in the NASDAQ 100 and 50% into that S&P 10% excess return low volatility strategy, that will give you the best performance you can see in an illustration. So think about that when you start to present to your clients. Do I want to show a mini asset allocation model, or do I want to just show really great performance? Your pick. Obviously, there's lots of ways we can run illustrations, and I know Pinnacle can help you with that as well. Taking the fixed bucket one step further, I would say this is probably our most popular sales strategy at Oceanview, and that is taking the fixed account and stretching into year two. So instead of just going 9% the first year and then going into the indices the second year, going into the fixed bucket for a second year to get a great 2-year guaranteed return. And as you can see here, we take the 10-year product. We're going to start out with that enhanced 9% fixed bucket. We're going to have a second year rate at 375. That's the base rate, which is going to give me an average return, or a blended return, excuse me, at 1309, or an average annual return of 6.34. So Mr. and Mrs. Client, we're going to stay in this fixed account for the first 2 years of our 10-year surrender period, and I know that you're going to get over a 6% return. No questions asked. Same thing with the 7-year, 8%, 375. I'm going to give my client just under a 6% return for the first 2 years. So I can kind of say, you're concerned about the volatility, you don't like what's going on in the world, you don't like something in politics, you're concerned about what's happening with tech stocks. Let's not worry about that for 2 years, and let me give you a great performance of a fixed index annuity with using the fixed bucket. Now, what's interesting about this is that we've been using the enhanced fixed account for now just coming on 4 years, and believe it or not, 72% of our policies are staying in the fixed bucket the second year. So this strategy is working amongst agents and advisors of staying in the fixed bucket for 2 years. Going to the next idea. And this is an interesting concept because we do offer great MYGAs and we do offer great fixed index annuities, but how can I pair them together? And really this piece called anchoring allocations can be positioned in 2 ways. The way I have it here and where I've gotten a lot of interest is the split ticket of using a 10-year MYGA, currently at a 5.2% rate, and using the index annuity and taking that fixed bucket concept all the way through for 10 years. So if I had $200,000, I'll put half that money into a 10-year MYGA. I know that that's a guaranteed return. That rate's for all 10 years, and I can say this is what we're going to end up at the end of the 10 years. And then I can put the other half into the fixed index annuity and look for that variable return. And again, tax deferred growth, I have liquidity in both, but at the end of 10 years, I've got a guaranteed side and a variable return based on indices, and we can do a split ticket. Now, the other way that this could be used is from a laddering concept. So maybe I use a 5-year MYGA, and then I use the 10-year fixed index annuity. At the end of the 5 years, my MYGA comes due. I can decide what I want to do with that money. Do I go into another 5-year MYGA? Do I liquidate and I need the money for something? And then at the end of the 10 years, I've got that money that comes liquid. Keep in mind that we can arrange this in any way you want. So if you're like, I really want to tailor this for what fits my target audience, and I like want a 3-year MIGA and a 7-year index annuity, or I want to use a 5-year MIGA and a 5-year index annuity. Let us know how we can change this, and we can build out this based on your needs and, again, your target market with your clientele. Now, as we've seen in the marketplace, the interest rates have come down a couple times. We've got thoughts, the market's considering that we need another drop in interest rate from the Fed. And now we're going to start thinking about, well, where can I go to get greater yield? So if we take a look at switching from a MIGA to a fixed index annuity, one of the advantages Oceanview has is one of the few companies that offers a 3-year fixed index annuity, is that I can actually start to think about, well, what if I decide to use a fixed index annuity 3-year basis instead of a 3-year MIGA? And what I did is I went back and I kind of back tested what the S&P's performance has been since 2000 versus if I looked at a MIGA with a interest rate or guaranteed rate of 5.45. So went back to 2000 and started looking at the daily performance of the S&P every single day. And then when it hit year 2003, I started looking at what rolling returns of the S&P every day were. It's over, I think it's over 60,000 entries, but never mind, not to worry about that. What it boils down to is that 68% of the time, a par rate at 60% of the S&P would beat a MIGA rate at 545 with an average annual return of 6.92. So there is the opportunity to say, I know we want to do this short term. We want to do 3 years. Yields are coming down. I have an opportunity where we can get better performance by using a fixed index annuity for 3 years instead of a 3-year MIGA. And historically, it is outperforming, in this case, a MIGA that I chose at 545. Maybe another angle for you when you're talking to your clients. We talked about rates, and I brought up earlier that, we're keeping the 950 for a reason, because we want to keep that cap rate all the way through the 10 years. And historically, Oceanview has done an amazing job of having great renewal integrity. This is our current piece. We have a new piece being updated. And I can tell you right now that, we've gone back, we looked at all the policies we've issued since 2021. I'm sorry, yes, from 2021 forward, and looked at every policy and what the renewals were. And when we take a look at that, 97.5% of all policies issued had the renewal at the cap rate that the client received at issue. The cherry on the top, though, is that 9.6% of all the policies we've issued since 2021 have had a higher cap rate in renewal than the client got at issue. So we've done our best to really price this to be right in line with rate integrity. But more importantly, when those clients had the opportunity to get higher cap rates, we provided that as well. Okay. So we gave you some sales ideas, some sales positioning. Not everyone on the call may be familiar with Harborview fixed index annuity. So let me talk to you about the product in general. So as you saw from the rate sheet, we've got a 3, 5, 7, and 10-year surrender period. There's one error on this slide that I'll fix in Word here. So the 7 and 10-year issues up to age 84 and 364 days. The 3-year and 5-year surrender period issues up to age 89 and 364 days. Keep in mind, again, all commissions at this point pay full comp through the max issue age. So if you do sell the 3 or 5-year, you're going to get paid full comp up to that age 89. 10% free withdrawals starting the 2nd year, and that's all withdrawals. Unfortunately, this product is not what we would call RMD friendly. So if your client does have RMDs to take, they would not be able to take that withdrawal in the 1st year. It'd be better for them to take that distribution before making putting the money into Oceanview. For additional liquidity, we've got a nursing home confinement waiver and a terminal illness waiver for available. Just for that extra, I feel good at night. If I need my money, I can get to it. We talked about the strategies already: S&P, Russell, NASDAQ, and the fixed rate. Again, all indices well known, easy to explain indices strategies. Nothing really here complicated. no bespoke indexes, no wild low volatility strategies, just plain vanilla, simple story. And that is what's really caused our consistent growth in this product year over year. We are on our fourth year that we're going to double sales from the previous year. So I don't know how many more years that I can pull that through for our senior leaders, but we are on pace again to double our sales from last year. And we've done no changes to this product since we've launched in February of 2021. Just that simple story and the ease of business is what's sold here. A little bit about Oceanview. So we are based in Denver, Colorado. We have our offices downtown. We do business in all states except for New York and Vermont. If you're in the Vermont area, we are expecting to be in Vermont by the end of this year. We are rated AM Best A. That was an upgrade from A- in 2023. And we're actually in the process right now of talking to 2 other rating agencies to get a second and third rating at Oceanview. So we've had fantastic growth over the years, but I would call it sustainable growth. We started in 2020 with just under $1 billion in sales. 2021, we launched our fixed index annuity, and we've slowly grown through the years. Like I said, at a consistent base, we're just going to end this year probably just under $4 billion. And I think that's one of the things that's been really attractive to Oceanview is not only the products we offer and the simplicity of that, but just that we'd be able to keep pace with the amount of sales that come in from an operations standpoint, which leads me to talking about our SLAs and for the last, I would say now it's November, so I say the last 18 months. I take a look at this on a regular basis, and I'm always in contact with our operations team. Can't say that we haven't had any hiccups along the way, but in general, we have stayed within our SLAs. So if we do get a policy in-house, an application in-house before 3 o'clock, it gets a policy number that day. If there are any NIGOs, those are posted in our portal within 3 days. Once you send in the requirements for that NIGO, that paperwork will be processed, and within 2 days, if it's a 1035, we'll get that out, or we'll go to issue. If you do have a 1035, we do a follow-up to the surrendering company starting in 10 days and then every 20 days. Cash with app goes to issue within 3 days. Right now it's 48 hours, but our SLA is 3. If you're working at a broker-dealer bank, we do have DTCC and Firelight and Affirm and all the other technology, but we'll issue that if the money comes from a brokerage account within 2 days. Commissions are important. We pay commissions daily on our MIGAs, and on our index annuities, we pay commissions every Friday, as all policies are issued on every Thursday. So new products. Very excited to say we are going to have some new products. We've had the same 2 products since we launched in 2020 and 2021, but we're going to actually launch 3 new products over the next 8 months. And the first one will be Cap Lock. Cap Lock's expected to come out December 12th of this year. That will be a fixed index annuity. It'll have surrender periods of 5 and 7 years. And what will be different about this product will be that it will be capped to term. I'm sure many of you are familiar with the other carriers out there that have the capped to term products. Ours is going to be, in general, the same. It'll be the same cap rate for all years, but we'll be the only carrier that will have S&P, NASDAQ, and Russell in the capped to term numbers. So in the policy or contract, you'll have the ability to, if you want to use the 3 indices and get a cap to term, you can, but you can also mix and match. So if you said, well, I just want cap to term on the S&P, and I'm going to go with what the new money rate is for the NASDAQ or Russell, you can do that, or you can pick whatever variable you want. But we will be the only carrier out there that has a cap to term for those 3 indices on one product. So very excited about that. That'll be coming out December 12th. And right now we are looking to price that aggressively. So if you keep your eye out, I think we're going to be to have the best rates in the industry on that type of product coming out 12/12. Additionally, in the first quarter of 2026, we're going to have a floating rate fixed annuity, not a MIGA, but a fixed annuity, which is going to have a little twist to it. Many of us are familiar with the old floating rate where I get a first year declared rate, or I might get a declared rate for the first 2 or 3 years, and then it floats based on renewals. This is going to have a little performance into it. So it'll actually give the client the opportunity to get increasing rates each year based on the performance of an indice. So look for more information on that. And then, of course, we all know that bonus products have been, the last 2 years have been kind of the home run of the index annuity industry. We don't have one, but we're going to develop one. We're going to develop one that should come out in the second quarter of 2026. And some might say, well, by then there's some speculation that the replacements will kind of dry it up. Everyone will look for something new. But, you know, I've been in the industry for a long time, and bonus products have always had its place. And we believe that just having the bonus product will help you and help your clients, depending on the scenario they need. So that'll be available in the second quarter of 2026. So a lot of great things happening at Oceanview. You've got the very simple products we have now, the new developing products we have coming, fantastic operations, an amazing IMO that you're already working with that we have a great partnership with. So a lot of great reasons to take a look at Oceanview. So with that, I will thank you for your time. I'd be happy to take any questions if there is any, and I'll turn it back over to you, Greg.
All right. Thanks, Dan. Great stuff. Really enjoyed it. Yeah, before we go into a couple questions that we have, just want to reiterate, there is paper applications, but Oceanview is on our version of Firelight, which is on our pfsinsurance.com. So please check that out. Get familiar with it. It just makes it so much easier to submit the business electronically. So much quicker. You get paid quicker. Clients are happier. So definitely check out our Firelight application. It's under our open enrollment section of our website to submit the business electronically. Couple questions we had. With the interest rates starting to creep down, do you see more sales going to the fixed indexed annuity or the MYGA?
Well, right now, we're seeing more sales go to the MYGA as everyone's rushing to get that rate locked in before interest rates come down. So we've actually, we have a tendency to have the majority of our MYGA business in the 2 and 3 year tenors. What's interesting is that 10-year MYGA at 520 is the one that has the greatest growth from a percentage standpoint. As you know, if you got clients that are saying like, I don't have any need for this money, I have the time horizon, or I may never use it, saying, you know what, just get me the best rate and let's lock that in. But we have seen a quick spike in MYGA business after each time the Fed has announced that they're going to have a rate reduction.
Okay. And then it seems like you pretty much answered the next question that was what's the most popular MYGA right now? And I think you said that was the 2 and 3 year are the most popular. Is that correct?
That is correct. There's only I think there's only 3 carriers that have the 2 year tenor for a MYGA, us being one of them. But our sweet spot historically has been the 3 year. That's where we've always priced best.
Mm-hmm. And I think you had mentioned, I may have heard this, that a lot of times agents are using that 2 year MYGA almost as like a money market or CD alternative pretty consistently because it's such a good rate for 2 years.
Yeah, that's correct. Thank you for bringing that up. I would say that we've got a pretty good number of advisors that are using the 2 year MYGA as a money market alternative. So, you know, my client has a large amount in the money market. Where can I position that for short term? Get a little better rate than I can in the money market being offered at the bank or my broker dealer. And then knowing it's short term, 2 years from now, we can make that decision. Do I need this money? Do I need to take a portion of it? Or if I don't, I can just roll it over. The advisor gets paid again, and it goes back into the new money rate at Oceanview. Yeah,
it gives you a little flexibility and get that bridge to kind of figure out what you want to do next. So I like it. All right, that is all the questions I have. So if there's no other questions, everyone have a great day. Dan, I thank you again. Great presentation. Just to reiterate, I love working with Oceanview. Very easy to work with. One of the best carriers that I work with. So thank you everyone for joining us today and have a great rest of your day.